Hello and welcome. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Aisha Faridi as well as Avant Dubash. And for the market, it's looking a prettier picture, at least in the sense that the low of the market today was around that 17,450 mark at the start of the trading session. Since then, we have bounced back and the market has held on steady. We are, of course, not gaining, so there's not huge buying on dips which is at play, but at least we are not giving up those gains. It's been a choppy day. It's the day of the monthly options expiry, so that's pretty much expected as well, that the choppiness will really continue. But in terms of the stock-specific action and sector-specific, it's ITC that deserves mention. It's hit a fresh record high today in an otherwise weak market. It's now heading towards that 400 rupees mark. So after that, 50-60% growth that we saw in 2022, the stock is on a tear, even on 2023 as well. Z Entertainment has also made a solid comeback from the low points of the trading session. At one point of down, it was down about 10%. It's the last time I checked, it was down just around 2 to 3%. So a solid recovery at play there as well. The market breadth is also even Steven, so not much cues coming in from that segment as well. So overall, it's a bit of a tepid market coming in. If at all, Aisha, the only saving grace is that at least the US futures for now is suggesting a bit of an upside, almost 100 points higher on Dow futures.
Oh yeah, that's a big relief, right? Considering yesterday we were only tracking the global cues and that led to that big tumble. Even Europe, for that matter, has started off on a positive note, barring FTSE, the CAC, the DAX, FTSE, MIB are all trading nicely in the green. And yes, the US futures for the Dow we're scaling higher by 100 points. The S&P futures higher by 0.5%, and the Nasdaq futures as well are scaling another almost 1% higher in the green right now. So that's clearly somewhat rubbing off on our markets. At least we're not falling more. We've got our own internal dynamics like the expiry as well today. So, suffice to say, it is going to be a volatile and bumpy ride, as it has. Like Anisha mentioned, from that 17,450 level, we've seen a huge comeback with names like ITC, ONGC, Axis Bank, Tata Motors, SBI, all leading the way up. The only unfortunate thing is that the market breadth hasn't managed to see a very big recovery. It has recovered nonetheless from the session lows, but Z is down 5%, even though it's rebounded significantly from the session lows. Idea is down 4.5%. There's Indiabulls Housing, which is down about 4.5% again. Asian Paints has been quite the weak link from the word go today and hasn't seen any signs of resurrection, still lower by 3%. And then the diagnostic space, in any case, is a little bit skittish. So is IndusInd Bank, Divi's, Britannia, and L&T as well, which is lower by 1% as we speak right now. Good time then to bring on board our chartist. Let me take it up with Naresh first. Naresh, hi, afternoon. Good recovery, Naresh, from 17,450 odd levels, but what's next?
Good recovery and a test of almost the same prices for the bank Nifty. 39,500 was the budget day low. We made a low very close to that, say 100 points higher than that. So clearly finding support around those areas. Risk reward is on the positive side for a bounce from here on. So maintain a buy stance on the Nifty. We could expect a bounce back in the banking space as well as overall in terms of leadership. Continue to believe oil and gas, power and public sector enterprises look the best. Now, if we look at HDFC Bank, that could be the critical one going forward. The stock is back to 1600 levels. The 1550 to 1600 is a strong support area for the stock. And the stock is at the same price where it was 2 years back. So this is a stock which could take a comeback, go towards 1700, 1720, and then we may again review. But overall, bias is extremely positive with its prices purely on risk reward.
Does remain positive. In fact, as well for the overall markets, is that we managed to scale up from that 17,460 mark that we saw earlier this morning. So now it looks like consolidation around the 17,550 mark. Meantime, Naresh, let's get in your thoughts then on some of those newsmakers that Aisha just flagged off as well. The fact that Anisha just flagged off, the fact that Z Entertainment has managed to recover. What's the view on the charts, and have you had a look at the stock price of a Sonata Software as well?
So Z has come back, made a low almost close to the price where it was before the whole announcement and the whole thing started off back in 2021. That time the high price before the view was around 175 to 185. So the whole gap has been filled, and now the stock has at least recovered for the day. And today's low could be the most important price point for the stock going forward. So if somebody has a positive view, one can take a contra bet on dips to 185 to 195. With a strict stop loss below 175, although a bigger reversal would only be in play about 220. Sonata is an interesting stock because one of the few stocks in the IT small cap pack which went on and hit a new 52-week high and an all-time high in the last couple of sessions. So the trend remains strong, but some bit of a pause here at 750, 770 would be normal. So would wait for a dip and then maybe take a call here.
Kunal Bothra as well with us, along with Sandeep Sabharwal, who just joins in. And Sandeep, let's get in your take then on the markets as a whole, given the fact that now it's just a bit of a sideways move after the early morning blip that we saw. What's your sense as to how we're likely to shape up for the next series and for the coming months? Do you believe that consolidation is the order of the day?
I think the reasons for Indian markets underperformance and the fact that India is one of the worst performing major market this year has been because of the issues surrounding the Adani group and the sell-off related to that, which then flowed on to the banking sector. However, I believe a large part of that has already got built into the stock prices, and to that extent, hopefully that doesn't have too much impact going forward. Overall, valuations have become much more reasonable, and most global equity markets are 5 to 15% this year. So I think there will be a catch up from India's side also going forward. So my guess is that we have to be constructive. I would think that from here, upside potential is greater than downside risk.
I also wanted to bring the spotlight on Z Entertainment, and we'll shortly play that bite coming in from Karan Torani as well, wherein he said that the reaction that we saw with a 10-11% cut today is definitely an overreaction, a knee-jerk reaction per se, and he said that buying on dips perhaps could be the best strategy for Z Entertainment, given the fact he said that the downside is now limited on the counter. If he in fact can play up that bite on Z Entertainment, because that's the word coming in from UBS as well, they said that the event itself is not too material, but the only problem is it might delay the merger. Let's listen into the bite coming in from Karan Torani.
I think one can definitely use this dip as a buying opportunity, and one can start accumulating, because if you look at the valuations, clearly, even if you include the OTT losses and you assume that the merger is not going to happen, it is trading at almost 16 times one-year forward P. And if you look at other scenarios that we have built in, that the merger happens and then there's cash infusion, and even if you exclude or include OTT losses of Sony Live and Z5, both as OTT platforms put together, the valuations are in the range of 6.5 to 10 times. So valuations are compelling, provided that the merger basically goes through. But assuming that the merger does not go through, even then, I think the valuations are at reasonable levels and don't offer too much of a downside. So we believe that nothing worse can actually happen, from here on. And had the outstanding liabilities been larger in terms of the overall value, we would have taken a cautious stance over there. But because the amounts are so small, because there is a cash available, there is also a potential cash infusion which is going to come in, after the merger. We believe these are very small events, and I think the price is kind of overreacted basis that.
Sandeep, the other group and the Adani group of names, while the stock fall still continues, would you say the news overhang is out of the way or not still quite out of the woods?
I think there's no fresh news per se. So unless and until there is, where the chances are extremely unlikely that there is some default by the group, which I don't believe should happen in the short term at least, the news flow around the group it's more or less factored in. The good part always was that the large foreign institutions as well as mutual funds, PMSs, etc., had very small holdings in these stocks. So to that extent, its systemic risk is not so great for the equity markets. I think the risk was being felt more from the credit market point of view in case the group is not able to meet its liabilities. But I don't think that's the risk, at least in the short run. So to that extent, I don't think its influence should flow through going forward.
Meantime, Kunal, let's get in your take in particular then on some of the large caps that are coming under a bit of pressure in trade this afternoon. What's the view on an Asian Paints down nearly 3% in trade, and there's also heavyweights like L&T as well as HDFC Bank. Your take?
Yeah, I think this is a phase of the markets where the large caps would also be beaten down because of obvious reasons, mark-to-market pressure as well as selling from the institutional hands. I think that's one of the major reasons why you see the large caps in pain. But all we need to now determine is that whether there is an incremental sell-off into these kind of stocks. Now, for example, HDFC has been a stock which has been consolidating into a range broadly at that 2,700 mark plus or minus. some 150 odd rupees. Even Asian Paints, I think largely 2,700, if I'm not wrong, was the previous swing low for Asian Paints, which the stock had hit in the month of December and in January first half. So I think broadly there is no major damage to the stock price in terms of an incremental correction. So I believe that these could be opportunities where traders may probably just wait out for some more time. And if there is no incremental correction into these stocks, I think that could probably present as a good buying opportunity. For example, something like what we discussed, in the morning, stocks like TCS and many other IT names. I think they offer some very good opportunities. So I would probably use out this phase of consolidation as slash correction as a phase to try and buy the stocks rather than look at exiting these things.
Let's also take a look at some of the price volume buzzers as well. GAIL, for instance, has surpassed above the 50-day moving average. The volume is almost 3x the 10-day moving average as well. And there was a positive note this morning coming in from CLSA on GAIL, wherein they are expecting a 30% upside. So that's the reason perhaps that stock is up around 3%. Equitas Small Finance Bank has been buzzing off late. It's broken out of the reverse head and shoulder chart pattern as well. It's hit a 15-month high on an intraday basis, and the volume too continue to be on a higher side. So overall, 8% gain coming in today. And if I have it right, yesterday too, the stock was up around 5%. And ITC, that's the clear outperformer. Yesterday as well, when the market was overall weak, that stock was outperforming. And today as well, it seems to have broken out of a cup and handle chart pattern. It's hit an all-time high today, has been trading above all key moving averages and very close to that 400 rupee mark now. Kunal, your take as far as ITC, GAIL, Equitas Small Finance Bank is concerned, what's the recommendation?
Yeah, for ITC, I think we've been very bullish, and I think my last time when we discussed the target range for ITC, which I had highlighted, was closer to 400 mark. Now, I think we are now entering into a zone where the stock is trying to make a new high for itself, with very minor incremental gains. But I think these are good levels where one should look to start booking out profits, not risking to initiate fresh shorts. But I think at current levels, 390, 395, approximately 400 levels, I think is a good zone where traders may look to start, booking out profits. The stock has this odd tendency of going into a strong phase of correction, a strong phase of rally when the market goes into a corrective phase. So I think we are now into that phase. Hopefully, if the market gets into a comeback mode, ITC could also get into a correction phase. So traders may look to buy back again the stock at lower levels. So I would advise profit booking over here. Now for Equitas Small Finance Bank, I think it's an interesting high beta name. The stock has started to show signs of, I think, 3 or 4 days of consistent price volume action. Last week or so, the stock had a very similar kind of a price action move up 4-5% plus, and then the volumes also moved up higher, which means that there is specific buying which is happening into the stock price. So I would probably keep it on the radar, not initiate any buy as of now. Once the market starts to improve, I think that's a good zone where one may need to start adding on to these slight mid cap as well as high beta names.
Okay, stay on with us. Lots more to talk about.
Circling around the 17,550 mark, and that pretty much seems where we'll wrap up the trading of expiry. And we've got Vishal Malkan as well joining in to assess a little bit more about levels and some individual stocks that he's tracking. Vishal, given the fact that majority seem to suggest that we could see that expiry around the 17,400 to 500 mark, maybe it's a tad higher. Where is it that you stand, and what's the expectation for the upcoming series?
So I'll go with the majority and look at expiry being near 17,500 to 600 maybe, and that's the same bottom what was made around budget day. I think budget day's bottom is very important. If we respect that bottom and close above that, then we are safe. Once we close below that, then there's a further downfall expected. But I think it should hold on as per what we are seeing on the strength in major stocks as well. So 17,500 to 600 is the expiry, and 40,000 to 40,200 would be the bank Nifty expiry for today.
Is this underperformance from the banking sector likely to continue? What's the trade at the bank Nifty level? Should one, let's say, book out of pretty much their banking positions, or not at least roll over?
I would see this maybe the wrong time to book losses or maybe exit the position, because we are at the lower end of the support levels, which is around 39,700 to 800, which was the budget day also. So I would hold on to the banking position and roll over my position and wait for that bottom to break and close below that. Then only I'll take an exit. Otherwise, I think this could be a good levels where the market can bounce from.
If I had to ask you your top recommendations or the charts which are looking the most interesting to you, a consensus buy of sorts coming in, high conviction, what would those be?
Some of the stocks which we are tracking, especially from the auto sector, I guess one is Apollo Tyre, which has been consistently showing strength above that 310-20 levels, which also happens to be a cup pattern on the monthly chart. And in all this correction mode market, it has not corrected that much. So I think it's an clear outperformer. And as soon as market settles down, Apollo Tyre would be the best bet to enter into a stock. And with a stop loss of 310 for a target of 350 to 370. And one contra trade which I would like to take is Deepak Nitrite, which is forming a good bottom on the daily chart in the last few days, like a triple bottom around 1770-80, which could be the stop loss. 1760 would be the stop loss, and target could be around 1850 for the next few trading session, or maybe we can take it as March expiry.
Vishal, it's been just a couple of months into the new year, and on a year-to-date basis, if we're mapping out the sectoral trends, IT has managed to outperform, while metals on the flip side has already lost out in double digits, and ditto is the case with the PSUs. Do you believe that this will be the year for IT to continue to shine?
I think IT is definitely on our radar for long-term buying, because they have already corrected in the last year and they are resting at important supports, be it Wipro, TCS, or Infosys, or even Mindtree. So definitely as a value pick, I would go with IT stocks for this year for sure. And looking at auto and metal especially, when you said that it has corrected in double digit, but they're also at important support. I guess another 4-5% down, and we are looking at very strong supports in metal as well.
To dip into some of the metal counters, and which are the IT names that you're tilting towards?
IT would be the first one. First one would be Wipro, which is around very strong support around 380-85, and it's like a very low risk idea also, considering the technicals and the fundamentals. So Wipro will definitely be one of them. And the second one would be Tech Mahindra, which I think is very similar to Wipro, but slightly outperforming on the daily chart, and managed to break that level of 1100 in the last few trading sessions. So Wipro and Tech Mahindra would be the best bet from IT.
Vishal, and just before I let you go, a quick word on ITC as well. It's 17% up this year already. After that, 50-60% rise last year. Is it heading higher, above the 400 rupee mark?
Absolutely. When a stock is in an all-time high zone like ITC is, and considering the effect it had on budget day, had a huge volatility, it actually shook out all the bulls out of it, and now it's making a fresh ground. So I would not like to catch a top when it is going into all-time high zone, but definitely looking at levels of around 420 to 430 in the next quarter.
On that note, thank you so much, Vishal, for joining us. Nuresh, I wanted your sense as far as Z again, because I think there is a fresh news flow which is coming in there with respect to the measures coming in. Maybe the company is, going to contest this order which happened yesterday, agreeing to hear the insolvency plea. And we spoke with a couple of analysts today who believe that the downside seems to be limited. Are you buying just yet, or would you wait?
So, I would not be buying right now because there are other opportunities I would prefer. But if somebody likes the stock, this is a good price at 190 to 200. It has retested the whole gap up move which had happened in September 21. Also, if you look at the prices, the stock used to be at 170 to 190 back in, say, July, August of 2020 or June of 2020. So the whole COVID till now, the returns have been zero. Even pre-COVID, going into this period, the stock used to be 250. So the stock has done nothing for the last 3 years plus right now. So in this case, and today's reversal intraday indicates the bottom is in place. So that could be a stop loss a little deep, but at 185 to 195, one could accumulate with a stop loss at 175. On the way up, once it starts sustaining about 220, that is where I would call the reversal is in place and a momentum is picking up.
What would be some of the interesting stocks within the entire mid-cap IT space that you would tilt towards, given the kind of outperformance that we've seen? Sandeep, that was for you, mid-cap IT.
See, mid-cap IT performance has been very disparate in the sense that some of them have hugged or underperformed the large-cap outperformers, and a few have done exceptionally well. Now, from the ones which have done exceptionally well, the valuations, in my view, given growth prospects, stocks like KPIT, etc., have become excessive at this stage. So I would like to, for the IT sector, I would like to wait out.
There was interesting brokerage notes as well coming in on the entire new age tech space. They're talking about Zomato having potential, a 500 rupee target price on the likes of delivery, but a little bit cautious when it comes to Nykaa. Sandeep, your assessment, would you concur?
Yeah, so because Nykaa is going on a different plane, like now they are going so much offline investment in offline stores, etc. So I think the story totally changes. So I think the way people are trying to evaluate it in terms of when it goes into profits, etc., that will get pushed back, and to that extent, it will take more time. Zomato always had more potential, but somehow they don't seem to be able to keep their costs under control. Delivery again, the growth is slowing down. So they have so much of accumulated losses, and now their growth is slowing down from the earlier high levels. So I think that will be a challenge for them. And we've seen one large investor also exit at almost all-time low levels for delivery. I think so. So I think people should take all of these factors into consideration.
Okay. Thanks very much, Sandeep, for taking time out, joining in with your take. It's just about 3 o'clock. Let's get in those closing strategies as well and closing trades from our guests. And Kunal, what's on your radar today?
So, in terms of closing trades from the mid cap IT space, it's Reddington, something which we discussed in the morning as well at 166 mark. I flagged off that the stock looks very attractive, and that's a stock which I think has done reasonably well. So I would believe that the all-time high levels for Reddington is around 200 levels, and I think slowly and steadily the stock should get into that kind of an upward trend. So that's a stock which I would look to buy.
That's Kunal's top recommendation. And Nuresh, which is your bet?
Expecting a bounce in all banking names, so a risk reward trade done in SBI would keep a small stop loss at 5 and 3. So looking at SBI and HDFC Bank to actually bounce back. So SBI is the trade.
Time now to slip into a very short break, but don't go anywhere because it's the last 30 minutes of the trading session. Monthly expiry move will set in. We'll track that when we come back. Welcome back. Well, the market is not doing much. We are at 17,500. So there's a sharp fall which has happened. This is the 3 p.m. move that we talk about on the expiry day. So 17,500 is now getting threatened. That's a sudden move coming in, a dip of almost 50 to 100 points in the last few minutes itself. Before I go and talk about Z as well as the EV story, let me bring Nuresh into the conversation. Nuresh, this sudden slide coming in, what does this tell you in the market? Should one give too much credence to that?
So not really. Looking at it in the last 15 minutes, it's a expiry tick which we are seeing. We are not seeing a similar 50. We've seen a 50-pointer downtick on the Nifty, but we are not seeing something similar on the broader markets as such. So overall, just another volatility of the last 15 minutes. Any dips closer to 17,450, 500 should be a buying opportunity.
Flashes for you at the bottom of the screen with the latest comments coming in from Z, but the focus today right now is on Tata Motors, and that's because the paper ET has reported that Tata Motors has begun discussions with sovereign wealth funds and private equity investors to sell a significant minority stake in its EV division. The potential buyers could be the likes of UAE-based ADIA, Mubadala, etc. as well. My colleague from ET Paper, Deborshi, joins us with these exclusive details.
Like we have reported, there are a clutch of sovereign funds and also global private equity investors. We understand there is ADIA and Mubadala from United Arab Emirates. There is Saudi Arabia's Public Investment Fund, Temasek from Singapore, and also global PE funds like KKR and General Atlantic. So they're all engaged in the discussions. Of course, there is not full certainty that over the number of investors who will ultimately invest. We understand that the ask is, around 15% to the last valuation round, which was around $9.1 billion. You remember last year, TPG was one of the investors who had invested in the EV business. So this time we understand the ask is around 10 to 15% premium from that valuation round. We also understand that once the deal closes, the proceeds of the sale, the money raised, will be used by the company to retire its debt. There is also a possibility that a small amount might come for the company as primary equity, which will be used for the company's growth plans. But largely, the money raised will be used towards debt repayment. which is in line with Tata Motors' announced policy of becoming a zero debt company going forward, which will obviously have a significant impact on its margins once it is able to retire a large part of its debt. There is a lot of global interest in general around the EV space. And India being one of the most exciting markets, one of the fast-growing markets, there is definitely a lot of interest in investing in EV businesses, and that is probably the reason we are seeing so many transactions in this space, happening in a very short span of time.
Let's connect with Rajiv Singh as well, who is joining in. Rajiv, hi, good to have you on board. You wanted to just get in your sense as to what the outlook is when it comes to individual sectors, in particular the fact that in the last month gone by, as well as on a year-to-date basis, we've seen the high beta pockets like metals see a bit of an underperformance. Your take?
No, I think, overall from an automotive perspective, the last year or so has been pretty good, especially for the passenger vehicles as well as for the commercial vehicles. And I think the outlook, even from an EV perspective, looks quite positive. So I think the sector is going to do better in terms of performance on volume, as well as in terms of the value that we are likely to see going forward.
Their apologies for that, given that, the focus is going to be on the entire auto evolution, EV in particular, and just wanted to get in your take in particular as to what my colleague from the Economic Times as well was flagging off with respect to Tata Motors looking to raise that $1 billion via stake sale, and a lot of sovereign wealth funds are already in discussions. Given the fact that we've got some large potential buyers, close to $1 billion, what is your take on what this would mean for the entire EV space, and in particular for Tata Motors taking off on this front?
See, I think it's a good spot to be in, because India is the place from a perspective of the growth that one is looking at in the mass market, especially. So whether it is say passenger vehicles, where Tata Motors already has a lot of models which are already placed rightly, and also at sweet spots. So the sweet spot for India, typically when we did the consumer survey, said that vehicles in the 10 to 15 lakh bracket, that's the sweet spot that the consumers are looking at. And if I look at Tata Motors, of course, they have a couple of now models which are operating in that sweet spot. So I think that would help in terms of driving growth going forward. And I think what Tata Motors is trying to do is probably the right thing. Try and get money from other places so that they can go debt-free as an organization.
Taken. Hi, this is Anisha also joining into the conversation. I wanted to get a sense from you as to which EV, acceptability is higher. Is it getting faster and, easier in the two-wheeler space, or is it the four-wheeler space which is seeing the EV evolution at a faster pace?
So, of course, this is for me, you are saying?
Sure, for you.
Oh, yes. So definitely, see, from a two-wheeler perspective, I think the business case from a consumer perspective is already set. Because typically, see, even if there are subsidies which the central government or even the state governments provide, at the end of the day, it has to be making a business sense for an individual customer when they decide to buy a vehicle, whether it should be a ICE or it should be an EV. So from a two-wheeler perspective, I think the business case is very clearly established now. It makes a lot of sense for people to switch from an ICE vehicle to an EV vehicle. It's all about now comfort that the consumers have in terms of the reliability of these vehicles, the ability to charge these vehicles at their will, and so on and so forth. So I think that two-wheelers is very clearly a done thing. I think it's only a matter of time. We are just roundabout at the cusp where we may see a sudden increase going ahead in terms of number of electric two-wheelers sold in the country. I think in passenger vehicles, we are slightly behind in terms of the business case, but it is going in the right direction. The first movers that we may see could be also not just the individual customers like you and I, could also be, say, the taxi operators. Of course, for them, the bigger challenge is in terms of how soon they are able to charge their vehicle, because they want to operate their vehicle 24/7. But as fast charging stations come up and so on and so forth, I think that even PV will pick up, but a little behind two-wheelers.
I also wanted to get a sense from you in the terms of what's happening in the Indian markets versus globally. Now, globally, the likes of Tesla, etc., Rajiv, are coming under a bit of pressure, and there's not that much interest making investment into those pockets. Whereas in India, we're seeing this slew of global sovereign wealth funds as well as private equity players rushing to come into the Indian EV market. Is it just the case that India is late at adopting it? Is that the only reason, or there's some other trigger as well, you feel?
No, see, India is definitely a very large consumption market. So let's not forget that our population is now even maybe more than China. But even if I look at, say, two-wheelers, just take an example of two-wheelers, we are the second largest two-wheeler manufacturer globally. And people know that India, the two-wheeler market is there to grow in the coming times. So, of course, it makes a lot of sense for people to look at India from a large consumption base itself. And that's the reason why we are seeing so many players interested in investing into India. And this is just the right time because the investment is required across the entire value chain or entire ecosystem. It is not just in manufacturing a vehicle, but there are opportunities at the back end in terms of the component manufacturers. There are opportunities at the front end, which is to do with the entire charging infrastructure. There is an opportunity there as well. Even some players are looking at swapping of batteries as another opportunity area to invest. So huge opportunities, I would say, when global funds or global players, investment companies, global funds are looking at India as a market, they think about India as also a large consumer market or a consumption market from an EV perspective.
Right. Thanks much for taking time out and joining in and giving us your take on the entire auto space. Let's also bring on board Siddharth Khemka, who is joining in from Motilal Oswal. Siddharth, hi, good to have you on board. Just wondering if you're tracking what's going on with Zee Entertainment and what your view is as to how this could impact the overall merger process and what it means for the company, given the fact that now there have been 3 financial institutions that have filed appeals in the NCLT.
Yeah, very good afternoon, Avan. So I think the issue with Zee is the street was very positive once Sony got in and there was the proposed merger, but that is now getting delayed because of all these regulatory issues that has cropped up. NCLT admitting Zee with one of the lenders taking plea. There are 2 more lenders which have already put in their plea. Now Zee has gone in and put in a stay order with NCLAT. So I think this will take time. The amount at the consideration is small, and I think we believe that would be a step that Zee can take, that to settle the dues and to get out of the NCLT process. But I think once you get into this, there could be some delays and the street would have a wait and watch view right now, rather than just rushing in with any view saying that it will be easier for Zee to come out of NCLT process.
Let's take a quick look at the market as well, because it continues to be very choppy. So after slipping below the mark of 17,500, in fact 17,455 was the day's low, we're still around that level, and the Bank Nifty has also seen quite a bit of wobbly move, currently below the 40,000 mark as it has been throughout the trading session. On the gaining side, however, it's Shipping Corporation of India, which is gaining ground. It's up around 9%. My colleague Prakash had an exclusive story on it, talking about how the divestment could perhaps be moving forward. Let's listen in to that exclusive news break coming in from my colleague Prakash, because he talked about how the final approval seems to be in place and the divestment of SCI could be on the cards as well.
Yes, we have been informed by our sources that the Oil Ministry has completed inter-ministerial consultation on draft cabinet note, which is related with Kirit Parikh committee recommendation on domestic natural gas pricing. Sources are informing that ministries have submitted their comments during inter-ministerial consultation to the Oil Ministry, except Finance Ministry. As per the rule, comments have to be submitted on draft cabinet note during inter-ministerial consultation within 15 days, but comments from Finance Ministry is still awaited. However, sources are informing that no major changes have been suggested by Ministry on a draft cabinet note subsequently. While Ministry is now preparing a final cabinet note on the report that will be sent to the PMO and Cabinet Secretariat by end of this month. To implement this new pricing policy, it will require cabinet approval, because old pricing policy is applicable till 31st March 2023. So before that, cabinet note will be required on this draft cabinet note. As you are aware that the Kirit Parikh committee has recommended to have ceiling price at $6.5 and floor price at $4 per MMBTU for domestic natural gas prices. Also, it has recommended to have new pricing formula that will be linked with the 10% of the crude prices. Let's see by when this cabinet approval is being given by the cabinet.
Okay, so that was the exclusive coming in from my colleague Prakash, wherein he was talking about the oil and gas sector and what is the latest report coming in from the Parekh panel report, as the ministries have been discussing that. We'll try and get him to talk about Shipping Corporation of India as well, but in the meantime, let's take a look at what's happening with respect to various sectors. Equitas Small Finance Bank is sitting with a gain of around 9%. Riemann 2 is up around 8-9%. Bharat Dynamics has also been on a tear. But you know what, Siddharth, I wanted your take when it comes to the entire real estate sector. Now, while everyone was talking about how it's going to come out of a extended, prolonged hibernation, the numbers also have been pretty decent, but the stock performance has been very, very sluggish and disappointing. What explains this dichotomy?
Yeah, Anisha, so I think very well point that while the underlying scenario for the real estate sector has improved, we saw inventories kind of taking off post the COVID, but also the overall demand has surpassed supply after almost 8-10 years. And on back of that, we are hearing quarter after quarter, the launch sales, the pre-sales data are at record highs for most of the real estate players. The issue, I think, with the stock price is that I think there are twofold issues. One is on the interest rate cycle. While at the time of pandemic, we were at record low interest rates, that has been climbing up because of the inflationary concerns globally. The other is the commodity cost inflation that has hit the real estate players, and on back of that, they also had to take price hikes. Now, the concern is that while the current numbers have been pretty good, can the demand slow down because of the high interest rates, and B, because of the price hikes that the players have taken? That is somewhat holding up the real estate stock prices. But otherwise, if you look at from a purely from a financial performance basis, I think they have done pretty well. The pre-sales data, that is one of the key matrices that we track for real estate space, has been pretty strong so far.
Okay, fair enough. Meantime, Kunal, wanted to get in your take on some of the smart movers that we've seen in the month gone by. Apart from New Age Tech, there have been names like Voltas, that spiked up about 16% or so. You've got something like a Linde India as well that's had a fairly decent run. And Gujarat Fluoro, which is around 3,063, has gained in double digits. Any of these charts look interesting?
So Voltas looks interesting. Linde India also looks quite interesting. Voltas specifically. And this is the quality of a chart, because even at a point when the entire SPEP series so far has been a bit more tough for many mid-cap names, Voltas has managed to shine quite well from 820 odd. I think that's what the previous expiry was for Voltas. It's done slowly and steadily, quite well. The good part about the chart is that I think just yesterday or day before or 2 days back is where the stock had broken past about the 200-day moving average. That's also a sign of confirmation that the bigger trend has reversed for the positive for Voltas. Linde India, on the other hand, the stocks as such is consolidating in a range of 3,250 to 3,800, 850 mark, where the stock is trading right now. But then there has been a slight increase of volumes in the last 1 week of this price uptrend for Linde India. That could probably be an indication that maybe the stock is now trying to get ready for a breakout. So, I mean, for someone who's a breakout trader, may probably wait for another 1 or 2 percentage points and buy on confirmation about 39.20, 39.30 mark for Linde India. But because of the triggers and volumes, the setup of the price charts, I think buying at current levels may also turn out to be a very good bet for Linde India.
Okay, that point is taken. But what about the entire retail space, Siddharth? Because again, very dichotomous view coming in, wherein one part of the world is telling you that the urban consumption is slowing down, but then if you look at the footfall data or the commercial mall data, etc., that's telling you that there has been quite a bit of momentum there. And obviously globally as well, you got the comments coming in from Walmart and Home Depot talking about how they perhaps are going to look at flat year when it comes to calendar year 23. Back home, is there any name that you like from the entire retail space, Shopper Stop, Trent, etc.?
Yeah, so if you look at the retail space again, post-pandemic, we saw a very sharp pent-up demand, which helped them report strong numbers. But I think last 2 quarters, we have seen the overall consumption space reeling under the slower growth in terms of the consumption demand, and that has impacted some of these discretionary names. Specifically, if you look at some of these like the retail companies. Even the footfalls, I think that have come down. The same-store sales growth has kind of slowed down, and on back of it some of these stocks were trading at very high valuation, factoring in the high or the strong growth expected, resulted because of the weak numbers that some of these players reported. The stock price has corrected, but if you look at from a longer term perspective, I think there is a good scope for improvement, both in terms of the same store sales growth, in terms of the expansion plans, the penetration that these players are doing into newer geographies. That should help, and the newer product segments, that is also helping. Within this space, I think Trent somewhat reported much better numbers compared to an ABFRL, which I think 1 or 2 more quarters of weak numbers could continue. If you look at from an overall retail space, if you the most preferred player would be a Titan, but that is on the gold jewelry side. If you look at from the consumption side, we like Trend from a pure retail space.
I just want to flag off SCI because the ET Now newsbreak has been confirmed. Just earlier today, we got you that news that the Ministry of Corporate Affairs has approved the revised demerger plan of SCI and its core as well as its non-core assets, and that under, if we could just pull up the stock, under the revised plan, 1,000 crore rupees will be transferred to the non-core assets. And do remember, this move is likely to pave the way for the divestment of SCI. However, it will be only completed by FY24. And now we understand, as we said, that SCI has said that the Corporate Affairs Ministry has actually gone ahead and approved that demerger plan. Let's get in a quick view then on the charts. Kunal, SCI up and away in trade?
Yeah, I think it's quite a sudden surprise for SCI. The stock was just lingering below the 200-day moving average for last, I think, 2-3 weeks. The 200 DMA for the stock was around 120 mark. The stock made a low, I think, yesterday or day before at 116 odd levels. So to just trading below the 200 DMA, this would probably now indicate that the stock would now get back into a breakout mode. So I think this 116, 15, 16 levels that the stock had hit last week or so, I think that should now act as a support for SCI. I would probably expect that the range would now shift up almost 10 rupees higher. So maybe 135 could be a broader target for SCI over the next couple of days.
That's the take coming in on SCI, but let's get the BTST ideas out of the way as well. Naresh, you go first. What's on your BTST radar?
So looking at banks only for a bounce back, a buy on SBI with a stop loss at 513 and a target price of 550, a little more. Positional on BTST, it would be a little lower. A buy on HDFC Bank, a stop loss at 1580 and a target price of 1650.
About you, what's on your BTST idea? I hope it's not the tech names again, TCS, HCL Tech Mahindra, etc.
No, I think I'll probably give it a bit of a mix. Two buy calls, large cap names. ONGC is a stock which I would recommend as a buy. I think classical chart structures being formed for ONGC. So with rest 168 as a target, stop loss at 150. And for a change, even Bajaj Finance today I think is forming, in technical terms, we call it as a bullish hammer pattern on the daily time frame chart. So that's also an indication that probably the worst may be out for Bajaj Finance. With rest a buy. Targets of 6,400, stop loss at 6160.
Naresh, just wanted you to reiterate your outlook when it comes to the Nifty Bank Index. Given the kind of choppiness that we've seen in the last 1 month, what are the important levels that you're tracking on the Nifty Bank Index? Is it going to underperform the frontline index?
So I think the time for underperformance is over, and again we go back to inline performance or outperformance for the banks. The low of 39,500 was seen on the budget day. We've come very close to it today. So that is a price point which clearly tells you a support is there. So from 39,500 to 40,000, I would expect a slow and steady comeback towards 42,000 over a period of next few weeks. So extremely positive here. The risk reward is set at 40,000. Your stop loss is at 39,400 to 500, but your upside is 42,000 plus. So positive on the banks, especially the new leadership could be the biggest surprise would be HDFC Bank going forward.
Let's watch out for whether that outperformance comes from HDFC bank on odds, but just 4.5 minutes left for this expiry to get over. Remember, it hasn't been a great one for the bulls. The Nifty has actually declined by almost 350 points, a 2% cut coming in for the Nifty in the series gone by. The mid-cap index was down about 1%. The small-cap index was down about 2%. And even if you look at the sectoral gainers and losers, it was the metals which lost the maximum. In fact, the Nifty metal saw a cut of almost 16% in the series gone by. Of course, it was led by Adani Enterprises as well, which forms one of the large weight in that particular sectoral index as well. However, having said that, it was PSU names as well which was getting a beating, so a 10% cut coming in for Nifty PSU index. On the gaining side, however, it was IT that did well, so a 2% gain coming in this series, and Nifty FMCG was up around 3%. Siddharth, your take as far as the entire FMCG pack is concerned, which are your top bets there?
Anisha, in the FMCG space, I think again the rural demand was something that kind of continued to remain suppressed. And while again the cost side, we all know that raw material prices had inched up. So there's not much of growth that we are seeing now. ITC has been a preferred pick for I think last few quarters, and that has played out well given the challenges that the pure FMCG companies are facing. While for ITC, the cigarette business has been doing pretty well, and even in the non-cigarette FMCG business, the margins have shown marked improvement in the last couple of quarters, with the last quarter being the first time when they reported double-digit EBIT margins in the non-cigarette FMCG business. I think if you look at the entire consumer space, FMCG space, ITC would be our preferred pick now.
What's your outlook then when it comes to the entire media basket, Zee Entertainment aside, given the fact that now we are looking at overall penetration and, people stepping out with quite a bit of conviction. Is there any, potential upside that you're looking at for the multiplex stocks, the likes of PVR, Inox, Siddharth?
Yeah, so I think if you look at the entire basket of the media stocks, there's not much option there in terms of large stocks. So you have Zee, which is now getting embroiled in this issue. But PVR has definitely gained strength with the merger with Inox now almost underway, and we have that. I think leaving aside the risk of the OTT platforms, that the penetration happening there is much stronger. But in the recent past, we have seen strong openings from a lot of these movies, which are kind of helping the multiplexes also gain business. So I think with the merger now, with the market leadership in place, PVR could do well. The only concern, as I said, valuations a bit on the higher side, even if you take the merger in together in place. So currently we have a neutral rating on PVR, but I think once the merger takes place, the synergies kicks in. That is one player that one can look at within the media space.
Okay, fair enough. Thanks so much for joining in. Let's wrap up the markets then. And we're closing in at 17,500. That had been pretty much the consensus when it comes to what the poll was as to where we'd wrap up the expiry. After seeing that touch and go moment at the 17,461 mark, we have managed to claw our way back and recover. For the Sensex, 136 points down and very flat for the broader markets. Real estate, media, consumption, infra, as well as pharma, those are the sectors in the red. PSU banks make a pullback, metals, and even the Nifty Bank Index very quiet in today's trading session. To the big losers then, and Asian Paints on top of the charts, 3.5% off. L&T in the red, IndusInd Bank, Titan, Bajaj Finserv, Bharti Airtel, HDFC Bank, as well as Reliance Industries and Adani Enterprises. On the flip side, Coal India as well as Hindalco gain traction. Axis Bank along with Kotak Bank are in the green. HCL Technologies, TCS gain traction, and ITC, what a winner, at about 386 in trade. Take you through then some of the newsmakers in trade, and yes, indeed, ITC stands out on positive growth view. That stock hit the all-time high today. You had Tata Motors, the the Economic Times reports indicating that they've lined up suitors for their EV business stake. SCI flies high in trade. The ET Now Newsbreak confirmed the Ministry of Corporate Affairs approving the revised demerger plan of the company. Sonata Software in the spotlight on their deal to acquire Quant Systems. Mahindra CIE, the PAT from continuing operations grows 1.5 times. And yes, Z Entertainment has been a newsmaker. Remember, the NCLT admitted the insolvency petition against the company, and then you had as well the company coming out with their comments on the same, going ahead and saying that they filed an appeal in the NCLAT. Within the broader markets, just going to identify some movers quickly. IRB Infra in the red, along with the Adani group of stocks, as well as CSB Bank. But that's all the time we have on this edition of Closing Trades. Thanks so much for watching.